Welcome to a new update, and today we're going to look into the price action of Bitcoin, which has been grinding back up as Genesis has filed for bankruptcy. But we're going to dive into the price action because we are getting into a stage where the comparison to 2019 becomes larger and larger. But there's one big difference that we have in the current market environment than that we had in 2019. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our free trade letter which we provide 3 times per week. Today I've been making one myself in which I've been making an altcoin setup trade letter which grants you with multiple altcoin setups and levels to watch, which you can find in the trade letter completely for free. When we're looking at the markets, I think that we are generally getting vibes that we are into the 2019 stage, in which the price action is comparable to the price action which we have witnessed in 2019, in which we were trending up in a range. We were making bearish divergence, cracked down, but continued to make higher lows and higher highs, in which we broke through crucial resistance zones and continued to rally. That is a comparison to the current price action, in which we are currently looking at a case where, I'll just put on auto, which is easier, in which we can see that we've had a massive rally up, but we have already been making or cracking the levels here, which is different than the structure that we have in 2019. However, on the lower time frames, we can see that we're also getting this momentum going here. But the question is, what's going to happen when the markets are going to turn around, when the debt ceiling is going to be hit, which is the case, what's coming out of that. And we also see that the indices are still showing a weaker case, as those are making lower highs and lower lows, while the dollar is eager for a potential bounce at this point. And it starts to show strength already. As you can see, we're bouncing from the level that I've marked previously. We continue to have some momentum here. If the dollar is going to continue showing this strength from a higher time frame support zone, you clearly don't want to be into any risk on assets at this point, as clearly the risk off mentality comes back into play. Second question is, what are the yields doing at this point? Also, the yields have been sweeping a level, finding support and granting its rally back up. So most likely we're going to either consolidate until the Fed comes around on the 1st of February to state what they will be doing with the hikes. And probably people are going to sell off until then if they believe that the markets are going to be falling afterwards and that they continue the 50 bips hike. If we continue to rally, the expectations are going to be overly positive because the Fed simply has no argument to adjust. The unemployment is low. Yesterday we had the jobless claims, which was an ultimately low number again. So they still have no arguments to stop the actual Fed hikes at this point, unless they look at inflation, which is dropping faster than expected, but still not at the level that they want. However, we are going to get there as the month-to-month data is there. So we could be getting 25 to 50 bips, and that's going to be the crucial part for the coming months. If they adjust or pause, we have a period of 2 to 3 months that the markets are really going to shoot off, and that's when you get the relief rally on the markets. But until then, I think you should be quite satisfied if there is a certain relief rally like we have been seeing with Bitcoin. If we're looking at the total market cap at this point, total market cap is clearly into this resistance block that we have here. We have not been breaking through it yet. I think that once we do, we start to accelerate quite fast, and that's the period of the actual relief rally. If you're looking at the total market cap, you're looking at 850 billion as a potential support. And if we use the 200-day EMA as our crucial trigger, which often defines bull and bear sentiment, we are at a test of the 200-day EMA at this point, and we couldn't break through it. And so if we are not breaking through it, there's no reason to be bullish at this point. And I think that lower time frames are actually granting some slight bearish vibes at this point. So all in all, we have to look at the case of the US 100. Right now we are rejecting there. Most likely we will continue the rejection after we have had a slight bounce taking place from a gap which we created earlier, which was around 11,200 points. Slight bounce taking place. If we look at the case right now, we probably have to open up until 11,400. This video has been shooting before the actual open, and then we start correcting more as the debt ceiling case is taking place, and also tech layoffs are still continuing. Finally, when we look at the Bitcoin price action, there is some similarity with the case I discussed at the beginning of the video, which means we still have this upwards going trend. We also have the bearish divergence taking place here. So we still have this, right? The question right now is, what should we be looking at in terms of price action to enter? Well, still we have the case of 19.8 as a CME gap level that we should be eyeing. And then second, we've got this range low, which we also should be watching still. And if we get towards the range low again, as we are currently on that crossroad of a potential move, if we're getting towards this support zone here again, yes, 19.8, but also the area around 19K is the optimal entry zone that you should be facing if you want to get into the markets. Why is it in crossroad right now? Well, simply put, we are looking at a case of the resistance zone of the previous high, which is this entire block here. There we go. That's this entire block. That's the crucial one. I said earlier between 21 to 21.3, 21.1 to 21.3 is the area where you want to look for potential short opportunities. I think we've hit it. And now the question will become, if we are breaking this resistance zone, we take the high here. So then we have to see whether we continue having strength or we consolidate here, have a fake out. Then this range is constructed and we get towards the lower boundaries at a later point. If we are actually granting ourselves continuation and continue to make higher lows, higher highs, then the copy of 2019 remains, and then you can be looking at altcoins for continuation. If we don't grab the breaker of 21.1, I think you should be looking at this correction already, and then you should be looking at the case where 19.8 to 19.5 is the optimal area for entries. And in the coming few days, I'll be looking at some altcoins to look at and my outlook for 2023 when it comes to crypto. Make sure to hit the like button, subscribe to this YouTube channel, and I'll see you again tomorrow on a fresh new update. Ciao.